Chanda Kochhar, Managing Director and CEO of ICICI Bank, joins us. Ms. Kochhar, good morning and thank you for joining us. I mean, first things first, and before we talk about specifics of the conference, I mean, the moot point is that the government has cleared the NPA ordinance that empowers Reserve Bank of India and further pushes them on decision making. Do you think that NPA recovery now will be a speedier decision making?
No, I think this is a very, very powerful ordinance that has come out, and in a way it's a big milestone that can actually lead to or create an environment to enable a lot of resolutions going forward. Because as you said, in the past or so far, the focus really has been on recognition and what are the cases that need to be recognized as NPA. But given the fact that we live in a growth economy, and given the fact that many of these companies that have turned NPA actually have projects which are very good assets on the ground and are producing, I think we should all also work towards resolving many of those cases so that they can get back into the productive mode and start generating cash flows. Now, the real issue around slow resolution has been really the fact that a lot of banks have not been able to take timely decisions and implement those decisions in timely manner. And as I see it, the ordinance actually empowers RBI to do three things. In fact, it empowers RBI to create overseeing committees, and these overseeing committees can actually look at the resolution process and opine whether a right process has been followed. The ordinance also empowers RBI to push kind of timely decision making amongst the bankers, and lay penalties if timely decisions are not taken, and finally get them to take cases to NCLT if required. So after this ordinance, RBI has actually already come out with guidelines on saying that banks should take timely decisions. If 50% of the banks by number and 60% by value accept a plan, then it should become binding on the others. So I think these are very positive guidelines. What we would also expect soon is creation of more overseeing committees and expanding the jurisdiction of the overseeing committee. So once that comes into play, I think you would see banks now creating or forming resolution plans and putting them to overseeing committees and starting to implement it.
So out of the 30 to 50 corporate accounts that are stressed, which accounts and which sectors do you think resolution will be sooner than later?
I think the resolutions would of course depend, one, on the sector or the industry, because there are certain industries that are doing better than the others, and the second is it will also depend case on case or case by case on a specific company, depending on what really is the leverage level of that company and therefore what is the sustainable debt. But to give you an example, for instance, the steel industry, I think the government itself has taken a lot of initiatives with the minimum import price and so on, which has brought about a lot of stability in the performance of the industry, or rather in fact improvement in the performance of the industry. So these companies are now operating at better capacity utilizations. They are servicing part of the interest obligation and so on. So I think these kind of industries where there is an increase in capacity utilization, these are the cases that become kind of logical cases to be taken for resolution. Overall, of course, on your question on deleveraging, I think it's not just about specific industries, but there are specific cases where in consultation with the lenders, or lenders in consultation with the borrowers, are actually getting the borrowers to sell a part of their assets, sometimes core assets, sometimes non-core assets, so that they can deleverage themselves. So for instance, we've been talking about the M&A that has been announced, the large M&A in the cement sector, which means that one very important core part of the business of the company would actually get sold to another buyer, and as a result, the leverage levels of the selling company would come down substantially.
Right. Chanda, morning, and thanks for joining in all the way from the US and the sidelines of the conference. But your total stressed assets, they stand at 9 lakh crore rupees right now for, the entire banking cluster. How much of these assets do you think can be resolved over the next 1 year because of the steps being taken by the RBI as well as the bankers?
Yes, so in a way, a lot of the building blocks are kind of coming together, as I said, to create an environment that should be positive for resolutions going forward. One is, as I mentioned, that some of the industries have started doing better. So you need, some amount of improvement in the performance of the companies themselves, so that there is a visibility of cash flow. So some of the industries have started to do better. Especially the ones that have currently been under stress. So, they've kind of improved in their performance. The second is that some of the larger corporates are now much more open to sell parts of their businesses and deleverage themselves. The third is this entire push of the government around the bankruptcy laws and strengthening of the NCLT and the entire judicial system for settlements and so on. And the fourth is this new ordinance, which will enable actually creation of overseeing committees and really push the banks into timely decision making. So all these things put together is what will encourage resolutions. If you look at it, you mentioned this number of 9 lakh crores. If you look at it, actually the top 50 cases or so would probably be more than 40% of this whole NPA base. So even if you pick up a few and resolve them, it can have a meaningful, a positive, meaningful impact on the balance sheets of the banks.
Right. So when do you see corporate credit demand picking up?
When we look at the credit growth, I think we should look at it in its totality. Let us not only look at, the non-food bank credit growth, but let us look at the growth across all the instruments of financing. So what you are saying is true for the non-food, bank credit growth. I think that is between 5 and 6%, which is very low compared to the past historical levels. But what we should all realize is that the entire financial markets in that sense is undergoing a little bit of change. What is becoming an important source of finance is, say, commercial papers, bonds, and so on. So if you look at all these other sources of financing, whether it's CPs, bonds, and if you adjust for the Uday bonds that took place, actually that itself adds another 5 to 6% to credit growth. So in a way, 5 to 6% of bank credit growth, another 5 to 6% of these other sources of financing. So clearly, the total growth really becomes 10 to 12%. And then again, if you look at the overall credit growth, where is the growth coming from? I think the retail side of the growth continues to still remain quite strong. Yes, it's not at its peak level of 20% or so for the industry, but it's still in healthy double-digit growth, the housing loans, the car loans, and so on. On the corporate side, there is clearly, of course, a gradual increase in working capital because capacity utilizations of companies are going up. There is also increase in demand on account of refinancing because with interest rates coming down, with bonds, etc., being available, the better rated companies are actually able to refinance their existing borrowings and take advantage of this interest rate differential. So I think this is where the activity is actually taking place.
Well, so at the ICICI conference, what is the mood like, and especially for the Indian banking sector?
So first of all, I think there is a very, very great amount of interest in India. As you know, the macroeconomic indicators anyway look very strong. There is a belief in the long-term potential of India and India's growth. And of course, there is also this positive sentiment specifically created around this ordinance that has come out. And the various structural reforms that the country is undertaking. So I would say that, the investors are looking at India with a lot of interest. In fact, you are seeing that even in the way the foreign funds are flowing into the country. So there's a lot of interest, specifically on the banking sector, as you mentioned. The real attention of the investors now will be to see how resolutions take place. And as I said, if the ordinance gets backed by all the detailed guidelines from RBI one by one, I think we could create an environment that can kickstart resolutions.
Right. Chanda, I have to ask you, what are the queries that you're getting on India, on banking sector, etc., and the big funds? What are they keen on knowing more about?
You talk of probing, but I think we should look at the both sides of the questions, or that are in their mind. First of all, I think there are a lot of positives in their mind. So what they talk about is the macroeconomic indicators. What they talk about is the strength in the macroeconomic indicators. What they want to know about is where is the growth coming from? How is the government spending taking place? How is that driving growth? So I think those are all the positives that the investors are looking at. And then, of course, I think as you said, on the banking sector, clearly the focus is first, let me say, around the entire retail growth, which is actually ticking very, very well. What is also positive in the minds of investors is that actually the deposit growth has become quite strong after demonetization. The other thing we must remember, which is positive, is that actually the entire financial savings has gone up. You've seen a huge growth in insurance, life insurance, and mutual fund industry, and so on. So it's really a financialization of savings, which is very positive from the investors' point of view. The whole push towards digitization and technology-based innovation, I think is very, very positive from investors' point of view, because the kind of next practices that India is setting up in terms of technology and digitization of financial transactions, we've actually not seen that pace anywhere else in the world. So I think that's a very, very big positive from the investors' point of view. And then, of course, clearly, investors are eager to see progress to be made around resolutions.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.